to this week's Gold and Silver Club Weekly Commodities Review, presented by myself, Phil Carr, and Nick Cowsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. This live session will cover a end-of-week summary for the metals, energies and agriculture. We'll be looking at gold, silver, oil, natural gas and coffee. We'll look at the top trades of the week. We'll cover live market commentary and technical analysis. We'll also be looking at the week ahead, so key events looking forward, and of course answering any questions you may have too. So today's major headline news has been that gold rallied on a safe haven demand amid the Malaysian plane crash uncertainty. So gold prices surged on Thursday after a Malaysian Airlines Passenger Jet crashed near the border of Ukraine and Russia yesterday. Gold, a safe haven in times of uncertainty, soared on reports that the Malaysian Airline carrying 295 passengers had been shot down by pro-Moscow rebels in the region. The crash came a day after the US and European Union slapped new and tough sanctions on Russia following the annexation of Crimea in April and ongoing tension in the rest of Ukraine. The new sanctions are considered to be the largest round of penalties so far. The precious metal also found support on Thursday after Israel announced the start of a ground campaign in Gaza after 10 days of aerial and naval bombardments failed to stop Palestinian rocket attacks. So elsewhere in the markets, precious metals were boosted by increased demand in the world's two biggest consumers, China and India. Reports this week highlighted India, which is the world's second largest bullion buyer, speeded up imports in June by 65%, with shipments rising to 3.12 billion, up from 1.89 registered in the same month of the previous year. So this certainly helped to drive gold prices higher after a sharp decline on Wednesday, following on from comments from the Federal Reserve hinting interest rates could rise sooner than previously expected. So before we go into the technicals, I'm Phil Carr, professional trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I train thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Cowsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading, and prior to co-founding the Gold and Silver Club spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks, and through his first-hand relationship with some of the most successful traders discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. Right, so we'll just take a quick look at the gold price. Gold has retraced a little bit off yesterday's highs. We're currently trading at $1,307 an ounce here on gold at the moment. We'll take a look at the top trades of the week so far using the Gold and Silver Club signature trading strategies. Those are as follows. So we had a lovely breakout just yesterday on gold, triggered on that, and just a break of 1304. The risk was 65 points for each lot traded, so $650 for 200 points reward, so $2,000 profit for a 3-to-1. We then had Palladium breakout yesterday as well, which was a lovely move. The risk on that 65 points, so $650 for each lot traded for a profit of 125 points, or $1,250 for a 2-to-1. And we also had a lovely breakdown in natural gas on the storage inventories yesterday. The risk on that 60 points, so $600 risk for each lot traded for a profit of 120 points, so $1,200 profit for a 2-to-1. So those are the three top trades of this week. So now what we'll do, just take a look at the markets and how they are lining up as we come into the US session this afternoon. So first of all, We'll just take a look at the softs, the grains here. We did get a spike yesterday, very similar to gold on the safe haven buy. Wheat and corn, you'll see Ukraine and Russia are major exporters of these commodities, and we did see yesterday after the headline of the news, in the news of the plane crash, we did see an immediate spike in price on corn and wheat, which has been fairly short-lived. You can see here on wheat we do have a very key resistance trend channel, which the market just spiked up to yesterday, and it's finding resistance there again. With wheat, we've been in a downward trend here since May, which is really set to continue for the time being. We are getting a nice pullback and further downside this afternoon. I think as we go into next week, we could come down and see other key levels of support being taken out. Particularly, we're looking for a breakdown of the 524 level in order to really start selling much harder here down to the 500 level. The 505 is the key. 505 level is the next key support for wheat. If we take a look at corn, corn had a similar spike to the upside yesterday, not as dramatic as wheat, but we can see here we got a spike up to circa the 387 level, and we produced a nice inverse hammer on the daily. We're tending to consolidate still for corn at the moment, and I'm looking for a breakdown here from the 371 level, so a nice breakdown from that key level of support in order to really start ramping up to the downside here on corn. And you can see we did break major support over the last couple of weeks, as we've discussed in previous webinars. We're just continuing to stay within a very strong downward trend since May here on corn. So we're looking for more downside here, looking for a break of 371. Other markets which have been very lucrative this week, natural gas. Well, natural gas has actually come down to a key support zone at the 3.951 level. You can see that support zone has been a great take profit target here from our short. Initially, the first sell short opportunity we got was a couple of weeks ago on the break of this V-shaped reversal pattern, broke down from 4.327, came down to 4.10 last week, and then we've broken down another key level of support, and all in all on a swing trade that's been worth to you about 390 points. So we'd like to see now whether we are going to either break down lower here from the 3.95 area, or whether we will get supported and see a rotation higher back to around the 4.10 level. So we are very interested to see how we're going to close here on nat gas and see what trade opportunities are going to develop as we go into next week. But so far we've hit our profit target for the sell short. As we look at Brent and WTI, we did have a capitulation actually in the last week here. If we take a look at light sweet crude oil, massive move to the upside here. We got that key level of support, 99 level, did hold, and we had a capitulation at that level. We've actually moved just shy of 300 points this week to the upside after we got that huge hammer on the daily here just on Tuesday as we came down to a major support zone. So there's been some lovely trade opportunities on light sweet crude oil this week. If we have a look at gold, here's a breakout that we had yesterday. We've come down, we've retraced to the lower end of this support channel again, back to 1306 support zone. I think gold at the moment, we really, as we go into next week, we are lining up for a decent setup here, and I'd like to see whether as we go into next week, whether we can clear back above the 1320 zone or whether we'll get a break back below 1300. So with gold at the moment, we got a nice breakout yesterday, and we came up to 1324. We've had some profit taking at that level. We're now ricocheting and consolidating between the previous consolidation zone here at 1306 up to 1325. So next week we should give us more direction. Very similar situation to silver. Silver is back within its consolidation zone, did find major support here on its supportive level from 2056, which is the retracement level after the Federal Reserve announcement 3 weeks ago. We had that big spike up, a $1 spike from $20 an ounce to 21, came down, retested 2056, and we've found support there. So we could be due more upside. I'd like to see whether we either going to break down here, break below the 2050 level, or get a nice decent breakout above the 2150 level to the upside. On palladium and platinum, palladium looking very strong as we close the week. Palladium did get a decent breakout yesterday of 120 points. It did get retracement earlier on today, but you've got a nice hammer stroke dragonfly doji which is forming on the daily at the moment as we're coming into towards the end of the week's trading. It looks quite strong here, closing really more or less at the weekly highs as it stands right now. So palladium did also break out to 13-year highs this week as well. So palladium certainly one of the best performing markets of 2014 so far, and we would expect more upside as we go into next week. Platinum pulled back. We did get a nice lift to the upside yesterday as well from the safe haven buy that we saw affect silver and gold. At the moment we've come down and we've retested previous resistance here at 14.89, which is becoming support. So I think we'll have more trade opportunities here as we go into next week. We've got some very clear trend channels which are being held at the moment with platinum. Copper not doing as well actually as the other metals. Did break through some major support zone today, broke through the 3.1991 level. You can see we've come down, found a little bit of support here at the 3.164 level. We'll see how copper closes the week here. This could be a temporary pullback. Certainly the other metals are, we've had a pullback in gold and silver, but platinum and palladium may be able to bring copper back to the upside here. It could just be a temporary pullback based on the correlations. Finally, as we look at cocoa as well, this week continuing to consolidate and hold on to a lot of its gains. We can see very clearly here the 3.3051 up to 3154 level is the consolidation zone on cocoa at the moment. We're getting a decent support and resistance channel which is in place. So if this does break down, we could see a nice retracement to the lower end of this trend channel. Otherwise we may get a rotation higher and just back up to previous resistance at the 3154 level. Okay, so cocoa looking very interesting here as we go into next week as well. So the top picks really for the time being are going to be the wheat sell short, the corn sell short, and we've got a number of markets which we can look at as we go into the close. Some good setups lining up for next week on the energies and the metals. So with that, let's just have a look at the key news announcements which will be affecting the markets in the week ahead. So first of all, Monday the 21st of July at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the Chicago Fed National Activity. This monthly report by the Chicago Federal Reserve Bank tracks economic activity in the 7th District, which is comprised of Indiana, Iowa, Illinois, Michigan and Wisconsin. This index is used in tracking economic growth and identifying potential inflation. A higher than expected reading should be taken as bullish for the US dollar and a lower than expected reading should be taken as bearish. Then on Tuesday the 22nd of July at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US core CPI. So the core consumer price index, CPI, measures the changes in the price of goods and services excluding food and energy. The CPI measures price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Tuesday the 22nd of July at 4 p.m. Central Africa time, 10 a.m. Eastern time, we have the US existing home sales. That report measures the change in the annualized number of existing residential buildings that were sold during the previous month. That report helps to gauge strength of the US housing market and is a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And then Wednesday the 23rd of July at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US crude oil inventories. That data reports a number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. And Thursday the 24th of July at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest US economic data, and week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Then Thursday the 24th of July at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report. The Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. We certainly saw that happen yesterday when we saw natural gas sell off quite substantially, 120 points on the natural gas storage inventories. So those are the top 6 announcements we want to keep an eye on for commodities as we head into next week. And of course, for those of you who'd like to take your trading to the next level and find out more about the live trading room, you can request more on the Gold and Silver Club live trading room program and our daily trade calls. Please go to www.jointhegoldandsilverclub.com or contact us at our Johannesburg office. Telephone number +27 11 083 8403. And do make sure you subscribe to our newsletter to get free weekly report on the precious metals, energies and agriculture's live market analysis and prices. Very simply go to www.thegoldandsilverclub.com. Okay, so what I'll do, I'll leave those details on the screen for you to get in touch, and that is it for today's session, and we wish you good luck with today's trading. Have a great weekend and we shall see you on the next one. Okay, thanks everyone. Bye-bye.